Welcome to our educational video on the 2008 financial crisis. In this video, we'll take a closer look at the events that led up to the crisis, the causes and effects, and the actions taken to address it. The 2008 financial crisis was a global economic downturn that began in the United States and spread to other countries around the world. It was triggered by a housing market crash, which was fueled by a combination of factors such as lax lending standards, risky financial products, and a lack of regulation. One of the main causes of the crisis was the widespread use of subprime mortgages. These were home loans that were given to borrowers with poor credit histories. Lenders relaxed their standards in order to make these loans, and as a result, many borrowers were approved for mortgages that they couldn't afford. Another major factor was the development of complex financial products known as mortgage-backed securities. These securities were created by bundling together thousands of individual mortgages and selling them to investors. The problem was that many of these securities were based on subprime mortgages, which made them highly risky. Additionally, the practice of securitization, which is the process of turning mortgages into securities, made it harder to track the risk of these securities. Rating agencies, which are supposed to evaluate the risk of securities, gave many of these securities high ratings, making them appear to be much safer than they actually were. Furthermore, the rapid growth of the housing market also led to speculation and fraud, as some lenders and borrowers colluded to inflate the value of properties and make it easier to obtain loans. The effects of the crisis were far-reaching and severe. The housing market crash led to a sharp decline in home values, causing many homeowners to lose their homes to foreclosure. This, in turn, led to a drop in consumer spending and a decrease in economic activity. The crisis also had a major impact on the financial sector. Many banks and other financial institutions were exposed to the risky mortgages and securities that had been created, and as a result, many of them went bankrupt or had to be bailed out by the government. The crisis also led to a loss of jobs and a rise in unemployment, which further exacerbated the economic downturn. The ripple effect was felt in other sectors of the economy as well, such as in the auto industry, where many businesses went bankrupt. To address the crisis, governments and central banks around the world took a number of actions. One of the most significant was the injection of trillions of dollars into the financial system in order to stabilize the markets and prevent a complete collapse. In addition, governments and regulators implemented a number of reforms to the financial system in order to prevent future crises. This includes stricter regulations on lending standards and the creation of new financial products, as well as increased oversight of banks and other financial institutions. Regulators also sought to improve the transparency of securities by requiring more disclosure from the issuers of securities and rating agencies. Furthermore, to help homeowners affected by the crisis, the government implemented policies such as the Home Affordable Modification Program, HAMP, which helped many homeowners to keep their homes. The 2008 financial crisis was a devastating event that had a major impact on the global economy. However, it also led to important changes in the way the financial system operates, making it safer and more stable for everyone. Thanks for watching. Please stay tuned for our next video on financial topics.